Hello, today is February 17th, 2024. We always go over our disclaimer before reviewing our calls and making our predictions. Let's do that. It's my trading plan for Tuesday. The market's closed Monday for President's Day. Tuesday is February 20th, 2024. Please remember my calls can be wrong and all trades should be made at your own risk. Also, if you want to order my webinar on the rules I use, I'd appreciate a Gmail address. It's just easier for me to send it to such an address. You can order it from right here. Well, we had a target for Friday of 50.17.99. The target printed. Here it was support. Here it was support. And here it broke and became resistance. And if you're a bull, that's not the kind of chart pattern you want to see, where you break through resistance after testing it, break through support after testing it, and then fail to come back through resistance. It's kind of a negative pattern. This is the pattern with the early high. Typically, it's a rally day with a high in the final hour, and the high in the final hour is right here. But usually the high in the final hour is up here, and when it isn't, it leads to lower prices. Now, of course, you can substitute for this close by gapping and coming up here. Anything's possible. I'm not looking for that. And if it happens, we should know before the open. For right now, it's the weak pattern. Failure to close up here is a straight line drop. And it should lead to lower prices. It doesn't have to guarantee a lower close. But the implication of this pattern is that this drop is not over. This is just a reminder of what we said, calling for that lower target. And these are the patterns I'm looking for next week. Well, during the day we had this big rally. MEJT said it wasn't for keeps. It was a false move. The price would retrace, and that's already played out. Well, let's start with the long-term picture. This consolidation in the middle of the advance identified this low as a Fibonacci target. And the idea was it would also identify a high. And we're pretty darn close to our long-standing target of 50.87. Now there's some leeway in this. We came within 0.75%. And my thinking is that's probably close enough. Now this is a huge consolidation, a bullish consolidation since we went up. And the count implies over the next few years we're going to go much higher. And this is wave one of some degree of the advance. But let's not forget that a wave two can retrace a very significant portion of wave one. And there's a good chance this wave one's over. This is a daily chart. This was a weekly chart. Let's go to smaller and smaller time frames. Here's 5 waves up, and we're saying this is complete, and we have to find some way to count what's going on since then. This is the Gann fan line, which is resistance. This is RSI. See, it's giving up the ghost. Well, this is a 65-minute chart with your fibs. We'll keep going smaller and smaller to identify the smaller waves. Well, this is my preferred count. Here's the end of wave one. There's wave red A down. It's now possible to count wave red B as complete. If that's A and that's B, there's C. And C and A are equal. So that count works. And if you look at these subwaves of B, there's a good fib ratio. You look at the subwaves of A, there's a good fib ratio. The implication, if this high holds, is that we've completed red B up and we're now making red C down, which should be comparable to wave red A down. Should be a strong impulsive wave. Of course, we don't know what the degree of these waves are. This could be the end of wave 2 and then you go up again, or it could be just a part of a larger wave A of 2. This isn't the only way to count this. This is a 30-minute chart. This is a 5-minute chart, and it has wave 1, wave 2, and it has a still in wave blue 3, which is 1, 2, then 1, A, B, C, and the fibs work, and that's 2. And this now has us in wave 3 down to multiple degree. That's still part of this wave red A from the previous chart, but it would still be a wave 3 down of multiple degree. It doesn't break any rules. It implies lower prices. And again, you don't know if that is part of, we're still in wave red A down from this chart. I mean, if this is still part of wave red A, we could go much lower. Well, Tuesday's pattern has the early high. Typically it's a bullish day with a final hour high. If it fails, it's a straight line drop. Now it's the same pattern we had Friday. So the rules call for lower prices regardless of where we close. Again, if you gap and promptly overtake Friday's high, that kills the pattern. That would also kill my wave count. So my wave counts all call for lower prices. The counts are dependent upon Friday's high holding. So if Friday's high holds, the wave counts all call for significantly lower prices coming up. It's the pattern with the early high. Failure is a straight line drop. We could have a straight line drop. If it isn't, I think it'll be clear before the open, because I think we'll open around here. If we don't do that, it could be bombs away on the downside. That's today's call.